Hey everybody, welcome back. This is Drawbridge Finance. Today I'm joined by CC Lagator from Options AI, and we're doing a little interview question and answer, which I've never actually done on my channel. So CC, if you could just introduce yourself briefly, that would be amazing.
Great to meet you. I'm one of the founders of Options AI, which is a options-based, options-focused platform, and it's available both in brokerage form in the U.S. and subscription in the U.S. and everywhere else. And what it does is it's a platform where you can trade stocks, trade simple options, but where it really shines is the focus is on multi-leg options, and that is the way we do that is highly visual. So we're presenting these options trades and spreads from debit spreads to credit spreads to condors and flies. We're presenting that very visually, and we think that allows users to more quickly understand these trades, but then also actively put these trades into their everyday investing in a way that's a lot more difficult on a traditional platform.
Yeah, and I am pretty new to your platform. I hadn't actually heard of you before you reached out to me, but I like to trade complex options. It's one of the things that I do, and subscribers on my channel definitely see me do that frequently. So I've actually been playing with your platform quite a bit lately, and I love the ease at which some of these strategies just come up because it's totally in my style of trading. And so normally I don't do any sort of affiliate promotion things, but when you reached out, I thought, well, this is a cool thing, and I've been playing with it. And I was wondering if you could maybe show me a couple things today on how maybe I can streamline the process of using the platform.
Yeah, and so just a quick background on where Options AI came from is one of my co-founders and myself came from the industry. I was an options market maker. One of my co-founders runs a institutional options brokerage. And one of the things we noticed in our work was the difference that institutional order flow in options, how that looked compared to retail order flow. And the main differentiation is that retail order flow looks like a lot of lower probability, out of the money, heavily single leg options trades, right? And as your viewers know, and what you cover on the channel is, that next level of options trading is where the higher probability, the more consistent, sort of trade strategies, where that lives in options. And that's basically what institutional options flow looks like. My co-founder has he has a joke. He's like, I would rarely ever see a single leg option order from institutions, right? And if it was probably against something in their portfolio, right? As a hedge or, a straight income trade against, a long position, things like that.
Right, like a covered call would be an example of where I might use a single leg option.
Exactly. But the majority of that order flow, 70% of that order flow is debit spreads, credit spreads, things like that, right? And for obvious reasons. And then when you look at retail, it's a lot of people scanning a chain, looking for some call that they can afford, right?
Yeah.
And the downside of that is that's probably like a 10% probability of profit trade. And, you can't, that's not sustainable, right? And so when we set out, we were like, all right, let's focus on some of the most commonly traded spreads, and let's make it easier for people to get to those trades, right? And when we sat down, we realized that this story could best be told visually and sort of tearing down what a traditional options platform looked like, which is a wall of numbers, a somewhat confusing payout diagram, right, where the X and the Y axis sort of change. Mm-hmm. And your background's sort of interesting, coming from like an arts school background, because I was sort of the same when I was an options market maker. As a lot of the people I worked with, I met my wife at that job, and she was had a master's in math from Stanford, right? And so there's an assumption that a lot of people in these markets are straight numbers nerds. I was actually not like that. I saw a lot of this that job visually. I could sort of sense the ebb and flow of volatility and expected moves and, that sort of thing. And so when we sat down to start building Options AI, we were like, well, how do we present this visually? And, as you are on the chart right now with the SPY, the first thing we do is instead of just showing, a stock chart, we're like, let's show the expected move of this, and so what's happening over there on the right side of the screen is that's the future out, I think you're 1 month out. And that's showing every expiry in SPY, and it's pulling the options chain live and showing the expected move and what the IV is for each one of those expiries.
Yeah, and it's pretty wild. Like, I can't believe the speed. Like, we were talking before about how this is actually real-time data. So you're actually pulling the options chain to get this expected move. This isn't historical. This is actually live option data.
Live options data, and we're pulling it. It's not some sort of standard deviation calculation. We're literally pulling the value of those options and determining the expected move, and then that's live IV.
Yeah.
A massive Rube Goldberg machine to produce that simple diagram.
And it is very cool because, like, normally on a projected cone like this, a standard deviation cone, I would expect that this line would be curved, but you can see that there's not. There's like a wider expected move when we move from the January 11th date out to the January 13th date, which is cool. Now, does that happen on all stocks? Like, will that?
What's really interesting there is, obviously you have less expiries in Micron that we're looking at right now.
Mm-hmm.
But if Micron were reporting earnings, you'd see a massive bulge. Like let's say they were reporting earnings 2 weeks from now, you'd see it spike outward, right? And what that's telling you visually is that, people aren't expecting large moves in Micron leading into earnings, but they are really expecting one, out of earnings. And what was fascinating about the SPY chart from earlier is into those last couple of weeks leading up to the holidays where we had all that economic data, I had never seen it before. The SPY chart looked like it was about to have earnings.
Wow.
It was those weeks of the CPI and then the Fed announcement and things like that. It literally was going from an expected move of 2% to like an expected move of 4% overnight. It was really sort of fascinating, like those little. And so what you're seeing there is, my hunch is, that's just different vol from the expiries, and it's probably has to do with the new year.
Yeah, and it's just kind of going from the Monday, Wednesday, Friday expiration, looking into the January 13th, which should be a Monday, I believe.
You know what else happens out there is like the banks start reporting that week, right?
Right. That's what I was actually just looking. I was looking at the Canadian bank. I pulled up CIBC, but let me just pull up Bank of America and see if, January 13th, expected move 4.8%.
And you can go down to click that earnings tab right underneath.
Okay.
This is kind of cool. And so what we're showing is, when their earnings is, and then what it's done in the past, right? So those are all the prior Bank of America earnings, how much it moved that day, right? And it sort of gives you a real sense. It's like, this is what the options market is pricing for Bank of America's earnings. This is how it actually moved in the past.
Right. Very, very cool.
And visually there, you can see, because, saying that a stock moved 8% on earnings is interesting. Really interesting is like what it did into earnings and out of earnings.
Yeah, so we can see kind of the before and after, and it's really slick. Like, this data just moves around. Like, I just hover with my mouse. It's so, you guys have obviously spent a lot of time kind of getting the visual aspect of this. Now, I kind of want to jump into actually putting on trades. So let's do something simple like SPY. I mean, this is what everybody, myself included, I trade a ton of Iron Condors on SPY, and I typically do it like a month out. So could you just walk me through how I would use the platform step by step to find an Iron Condor trade?
Yeah, and so what we do is we start with, the buttons over on the right, it's like bullish, neutral, bearish, right? So obviously in this case, you would be hitting neutral, right? And what we're doing here is we're instantly generating an Iron Condor for that expiry based upon the expected move. So we're starting you off setting your short strikes at the expected move for SPY for that expiration, right? And then what we're doing is from there, we're saying, all right, do you want to customize this a little bit? Do you want to make it, broken wing? Do you want to, make it a little bit more lean, a little bit more bullish and bearish? And that's where you see on the chart where you can just drag these, drag the strikes, which are those tabs on the chart.
So I can just grab any of these legs, and then I should be able to just move that leg.
Yeah. And it will see if it's recalculating down in the bottom. It says Iron Condor and the strikes. So it just recalculated in real time what your new max risk, max gain, and probability of profit are.
Yeah, it's wild. Like I personally have never used any software like this. Like in my brokerage, to be able to do this, I can drag the strikes on the option chain, but the ability to just kind of grab the tab and move it up. Like if I was, wanted a more bullish condor, if I thought in the new year we weren't going to see any lower lows, then I can just adjust this and I can see what my probability of profit is instantly.
So and this is, going back to sort of starting with the visual aspect, right? Is the way that I saw an options chain. Options chains are crazy if you think about it. They're upside down, right? So they go from, instead of going up in numbers, they go down in numbers as you go higher on the options chain, which always was mind-boggling to me. It's very similar to the payout diagram, switching time and, the X and Y axis.
Right.
What we wanted to do here is we're saying, like, what are you doing with this Iron Condor? You're creating a profit zone on a stock chart, right? And so as you're dragging around those tabs, you're seeing the break-evens, that dotted blue line, go back into the past. And so, for instance, on that, the bottom, the put spread side of this Condor, you've created a break-even right at support, right? And you can see it. The blue line is right at those prior lows, from the last, couple of weeks. And that's the type of trading that, we want that sort of person that's like, instead of looking at a chain and then trying to go back to a chart and figure it all out, it's like it's all right in front of you.
Exactly. And I dragged that up specifically because I've been trading a long time like yourself, and we can see these kind of patterns and we can have some sort of personal assumption. And you're absolutely right. Like I usually set my stuff in my chain, and then I grab my break even, or I kind of know where it is, and I drag that on the chart to confirm my assumption based on the numbers or using delta. Now, is there an ability for us to see the delta of individual legs on your platform?
Yes. So if you go to, it should be under options data down on one of the tabs below. Yeah. So hit show options chain up at the top of that. It's over like on the right. And I'm actually going to make this a tab. It sort of annoys me where it is. So if you look, it's showing your strikes of the trade in blue down on that options chain at the bottom.
I see. Okay. So right here. Yeah.
Yeah. And so that's a live options chain right there. So that's showing a live bid ask. It's showing, and I think if you scroll over to the right, you'll see the ID, you'll see the, open interest and volume on the day. And so one of the thoughts that we've had is, sort of bringing that chain a little bit forward and making it a little bit more dynamic in the platform. And for the main purpose, when you build something this different than what people are used to, you're like, you sit back and you're like, oh, this is revolutionary. Like, people should be talking about this as like the new way to trade options, which we think hopefully they eventually will. But you have to give some little familiarity of what they're coming from, right? So if even in this case, you're looking at the options chain, it's the upside down traditional version. I kind of want to change it, but I don't want to confuse people, right? So you always, when you're building a product like this, you always have to like sort of sit back and stop yourself sometimes and say, are we pushing the boundary too far, too fast?
My 2 cents on that. I mean, I look at option chains all the time, and I like the consistency of knowing that the price gets larger, the strike price gets larger on the way down. Whenever I see chains that are flipped the other way, I'm like, well, now this is reversing everything I have to.
You have seen that, okay? Because I haven't even seen it.
Well, on some platforms you can just switch it. Like in my brokerage, I could switch it, and then it's upside down. Like I'm so used to selling puts on the upper right hand side.
It's funny, like this is fascinating. You think about the options chain. It goes back to like the 1970s, right? And so it came from the floor. Like when I was first starting out trading, I was on the floor of the American Stock Exchange, right? And I was a market maker in a crowd, and then I became a specialist. And we had these old green computer monitors, right, that everybody in the crowds could see.
Yeah.
And it is basically the chain. And so when you go and you look at like an options chain on whatever platform or, whatever service you're using, that's what you're looking at. You're just looking at an updated version of those old, black screens with the green print. It's sort of funny.
Once you've been trading a while, it is second nature. But for new people, and I think that's kind of part of your target audience, is trying to educate people and use a more visual aspect, which I love.
Yeah, and so one of the main points of that is, I'm sure you get this on your channel, you're educating people on these trades because you know that this is the only game in options, right? Like buying lottery ticket calls and puts and things like that is not sustainable. So, all right, well then how do you understand a condor? How do you understand a credit put spread? I mean, even that part, like when you first start trading, there's like the credit spread part is really confusing, right? And it takes a while for a lot of people to wrap their head around it. And the way I like to always describe it, we can do an example visually here.
Okay.
Go to Bullish, just, refresh that and go to Bullish, or, come out of that and start over, I guess.
Do you just want me to do, I'll just do
Yeah, so do like a call spread right there.
Okay, so if we click on a call spread.
Yeah, so hit the call spread, right? And so what we've got here is we've got, buying an at-the-money call, selling a upside call at the expected move, right? So you've got your red area of your risk, and you've got your green, that's your potential reward, and then you have max profit up above it, right? Now hit bearish and hit credit call spread. It's the same trade, right?
Right.
And so this is one of the things that I try to explain to people is it's not a credit call spread and a debit call spread. It's just a call spread, and you're either buying it or selling it.
Right.
And if you're buying it, you're risking X to make, Y. And if you're selling it, you're selling X to potentially make Y, right? And these are the types of light bulb moments, like, like when you're an educator or, you're building a platform that you hope like dawns on people is that's the same call spread.
Right. And thank you for that example. I mean, this is definitely one of the things that I try to teach people as well. Like when, I often do just put condors. That's something that is like part of my regular strategy. And it's just because of ease. It's like, I know they're all puts. I don't even have to deal with both sides of the chain, but it doesn't matter if I'm opening for credit or debit, the profit zone is the same.
It's the same exact trade, and that's a great example is whether you do a condor and it's all puts or all calls, or the downside is puts and the upside is calls. It's the same trade. And that's one of the weird things when you're a market maker and you start thinking of everything to the upside as calls and everything to the downside as puts, because it's all either puts or synthetic puts or calls or synthetic calls, especially if you're delta neutral.
Right.
So you start thinking about everything. You don't think of like a out of the money call, being a in the money put. It's just a call to you, and you're either long it or short it.
Right.
And so that's sort of that sort of visual. It's like risk to the downside, risk to the upside, opportunity to the upside, opportunity to the downside. It doesn't matter whether it was calls or puts. It's which side of that you're on.
Yeah, and like the condor, when we saw this, I can just drag this so that I can make this more bearish or more bullish. I can just visually do it, which, I mean, that's the part that is so slick about this, is how instantly all of this changes.
Yeah, and you can change over on the right, you could change the quantity to, just to play around, and that should instantly, recalculate.
Right.
Yeah.
And now I am always trying to put on as small a trades as possible. So I often am doing single contracts, and I would rather have my multiple contracts spread out over multiple durations. But that is very cool that you can just up the size, and then you can see how much risk is being put on. You guys are also a brokerage as well.
Yeah. Yeah, so we are a brokerage, which, obviously every account here, because it's so heavily, you can do calls and puts and you can buy stock, on the brokerage platform. And the way that works is stock trading is free, or zero commission, and then options trading is a $5 flat fee, no matter the trade type or the size.
Oh, cool.
So an Iron Condor, that's a 100 lot Iron Condor, is still just $5. The
Wow.
reason we wanted to do that is, we had this debate when we were setting the brokerage up. And, obviously we're competing in a world where you have, the big legacy brokerages that are charging, still, most of them are still charging per contract commissions. And then you have the free upstarts, the Robinhoods and the Weebles, who are zero commission, right? We wanted to sort of be we think we have something better than the free, and we think we have something easier than the legacy brokerages to use. And so we were like, well, this is something that I think people would be willing to pay for. But what we wanted to do was not have that be the commission, deciding what type of trade strategy you should be doing. We never wanted somebody buying an out of the money call because it would be cheaper commissions than doing a credit put spread or something like that.
Right.
And so that was important to us. And so what we see is a combination of people that are, they like the platform and they want this ease of, doing these types of trades regularly. We also see people come from the legacy brokerages and they're just like, this is going to save me a ton of money on commissions.
Right.
Yeah.
So best of both worlds. It's like, it's easy and potentially cheaper.
Yeah. And what we want to be known as is the place where, for instance, on your channel, you're talking about these spread trades, every day. And we want that to be, I can open up my phone and this is all mobile, this is designed for mobile as well. And I don't need that 50 screens Bloomberg setup, to be able to regularly do these trades. If I want to do an Iron Condor in SPY for the rest of this week, the rest of this holiday week, I should be able to do that in 3 clicks.
That's amazing. So you kind of have this like 3-click, and because that's one of the problems with a lot of things, like on my phone, if I want to adjust a leg or if I'm putting on a complex trade, there's a lot of buttons to press in almost any platform.
And what it ends up doing is it means you just don't do it, right? You can't be bothered.
Right.
And I've had that feeling where, I have traditional brokerage accounts and I would, I just forget to trade or I don't trade because it's just kind of a pain, right?
Right.
It's a lot of work. And so what we wanted to be able to do is to have that ability, whip up my phone, do an Iron Condor, right? You're not doing that on other brokerage platforms. It's going to take a while. You're not doing that at the coffee shop, put it that way. And the other thing, it reminded me when we were changing the quantities on this chart, the other thing that we really felt strongly when we were building this and thinking this through is that too often we think in contract size, we think in, for instance, if you were doing income trades on an existing stock position,
Right.
The traditional entry gateway drug into options for a lot of people is a covered call and things like that, right?
Right.
Unless you have 100 shares of that stock, you cannot do that trade,
Right.
And if you have an odd lot or whatever it is, right? And so what we wanted to do was to be really upfront is that one of the advantages of spread trading. So let's say, for instance, replacing that call, that buy right, replacing that short call with a short call spread allows you to think in dollar terms rather than contract terms, right? So if you own $50,000 of some stock and you want to be generating income against it, it shouldn't be dependent on how many shares of stock add up to the 50,000. If you want to be doing a credit call spread against that stock, you should be thinking of it in, I'd like to make $1,000 in potential income against this 50,000 every 2 weeks or a month or something like that. And that credit call spread allows you to do that because the only thing that happens, rather than being called away in a short call against long stock, if the stock goes up 20%, you've just lost the opportunity cost of that credit call spread. So let's say you were risking $3,000 to make that $1,000 in income. You've only lost that opportunity cost and you've made a bunch of money on your long stock. Now, you don't have that ability with just a covered call because you're called away and you've got to make a really weird decision, right? I mean, it's happened to everybody, right?
Absolutely.
it goes through your strike and you're like, ugh. You know, the plan was if this happened, but now this stock looks great and I want to stay long. That's why, you know, some of the you can be really nimble with these trades, you know, like a $2 wide credit call spread. It's a really nimble trade.
Well, let's set one up specifically. Let's talk about, say, I wanted to be long. I'm not going to use Tesla today because it's so crazy, but say I wanted to be long Micron right now, which has been trading down. It's had a bunch of downward pressure. What's the easiest way for me to do a stock replacement strategy where I'm making money if it goes up?
One of the first things, so, you know, pressing the bullish button here. This is really cool because, you know, across that, and you can hide that chain so you can see those cards a little better. You know, scroll left to right along those cards. What you'll see is, you know, it's starting with like a basic call, and then it's a call spread, and then a credit put spread, right? And the idea here is to present these trades side by side so that you didn't come, so you even said it correctly, right? You are, you know, you want to be bullish in Micron. You didn't necessarily come and say, I want to do a call in Micron, or I want to do a call spread, or I want to do a credit put spread. The advantage here is you get to sort of enter this with a view on Micron stock without having to go to the chain and start putting together trades to compare them, right? Mm-hmm. So you're putting that right in front of you. So now you're looking at like, all right, so here's the risk reward of a couple of these different trades side by side. And these are all just, you know, to the expected move, using those sort of expected move strikes. You know, so for instance, that credit put spread is selling the at the money put and buying that put for protection down at the expected move. Now, if you took that call spread, this is kind of an interesting thing with the drag and drop. So this is an at the money call spread. It's buying the at the money call and it's selling up at the expected move, right? Now, if you wanted to make that an in the money call spread, you can see this in real time and you're just dragging that down a little bit. You're making that call a little bit in the money. Look what happens to that break even.
Sorry, I moved it too far. Let me go down there a little bit.
Yeah, and so now look at that break even.
Yeah, I brought it right down to where the stock is.
Right, and so these are the types of, you know, the types of thinking that you can do really instantly. Is that at the money call spread was, you know, probably 40% probability of profit with a break even. I didn't see how many dollars higher in the stock. Dragging that call a little bit into the money, you're like, okay, now I'm risking more because it's in, you know, it's a more in the money trade, but my break even is right near where the stock is. And, you know, you mentioned stock replacement. This is a stock replacement trade.
Absolutely. When we're seeing that 50% probability and that break even is right at the money, that means that I'm losing on the downside and I'm making on the upside. And I have a 50% chance of doing that, which is what the expectancy is of holding a long stock position.
Right. And so what you've done is you've done this trade for less, obviously, than buying the stock. And you've created a risk reward profile that's really realistic, right? So you've capped your potential losses on the downside. And so it's going to act like stock. You know, if the stock goes down $3-4 or something, it's going to act like stock. If it tanks and it goes down 25%, it's not like owning stock, it's actually better.
Right.
And then on the upside, what you've done is you've financed this trade by basically selling to the people that are, you know, ridiculously bullish in this stock, which is fine, right?
Right.
And so if the stock were to go up 20%, would you be mad that you doubled your money? Probably not. Right?
No.
And so that's sort of the thinking is like, you know, what am I, you basically created a stock and it's a very simple, easy to understand option trade.
Yeah, I mean, to me, this is like the basics. And I would assume like you guys are kind of just getting started, really. You were talking with me earlier about how you're expanding the platform. Do you have plans to expand out to different types of strategies? And if so, what is the timeline on that?
Yeah, so what we did is we started with these trades, and these trades are, you know, all the way from sort of call to butterfly and condor, right? With a heavy emphasis on getting credit spreads in front of people because we think they're not done enough. Not that that should be your entire strategy, but it should be in the mix, right? And so what we ended up doing is we started with these trades and we said, these are really nimble trades. Like most people, this will serve them well. right? And especially starting with those expected move based strikes and things like that. It's like you can do a lot with these. You can do an out of the money credit put spread. You can do an out of the money credit call spread. You can do a condor. You can do a debit call spread instead of a out of the money call, which is sort of obvious, but it's not obvious on a lot of platforms. And so we started with these, and we started with U.S. equities only. So it's U.S. equities and ETFs. We're going to expand to more. We're talking to the CBO about futures and things like that. And you cover zero DTE, which is quite popular on your channel. And we're in talks about getting that sort of stuff started. We also this is a level 3 options trading account with really kind of like a good sort of parameter of risk reward, right? Like we wanted people to really understand their risk reward. Now, the next level of trader wanting to do a outright credit put, a cash secure put and things like that, or selling a strangle instead of a condor, we will be adding those things. But for now, what we basically say, so for instance, if you were to do a credit, pull up like do bullish and do a credit put spread, right? So if you were to drag both strikes down to make this sort of an out of the money credit put spread. So in this case, what we would be saying is if you drag that bottom thing down, like to the bottom of the screen, you're basically in a cash secured put at this point.
Yeah.
Not having to have as much collateral, right? Because eventually you're paying 5 cents for some out of the money put. So this is the equivalent of a cash secured put with less money is what we would say. And you're giving up 3 cents or 5 cents in order to do that. So we will be expanding into more of these areas. And then the other thing that's very recent, only in the last few weeks, is we've added a subscription service, which is $19 a month, and a huge portion of that is the live data costs, which cost a lot of money to access all these chains and things like that. The exchanges charge a lot of money, and we saw that as sort of twofold. One was it opens us up geographically, right? We can market in Canada, we can market in Europe, and places like that. But the other part of it is it's a great way to come and learn these trades, right? And when you are applying for an options account, this is sort of the weird regulatory environment of options accounts, is the expectation is you have to go out and do a bunch of crummy trades before they allow you to multi-leg trading, right?
Right.
And what we're saying is don't bother with that. Don't go waste $3,000 on some account before they'll let you do these. There's a way on Options AI where you can just sign up for a low-cost subscription and start paper trading these trades and get a real sense of how these work, right? And so, if we were to place this trade, if you hit review trade over there on the right, this will take you to a live trade ticket, and you basically save the trade, and you can track it over time, and it tracks the same way visually through these zones, which we find is very helpful. We might have made the browser go to sleep.
Yeah, now this is one of the things that I'm actually using one of your free services. So it's there's a few things in here that I don't quite have access to. So that might be something that's going on there. But when we're doing that trade, once you click this review trade, it should be going to an actual trade.
It's basically on the subscription service, it's a mock trade ticket showing you live bid and ask, and then executing that trade at a price. I think the default is at the mid, but I think we're just adding something that allows you to, sort of put in your own price.
Oh, nice.
If you were tracking it from having done it on another platform, that's very helpful. And then what happens is this stock plays out visually. And so what you start to learn on that is, that updated risk metrics of probability of profit, of probability of max gain, of probability of max loss, plus the updated expected move going through those profit zones. It gives you a real sense of trade management. So for instance, if you had sold a credit put spread at 80 cents, and all of a sudden now it's trading 10 cents, and you still have risk, and you see that expected move, and they're about to have earnings, and it's like goes back into your red zone. It's like that's a pretty obvious decision-making assistant right there.
And it's hard in most brokerages to see that. Like that's a hard element for people to understand, especially beginners, how much risk they actually have on when a trade is actually done well, and when to get out of that trade. So that's cool.
Yeah.
This has been fantastic. I don't have any more questions for you, so I very much appreciate your time today. This has been enlightening. And just to clarify, that you do have subscription services available for what I've been showing today globally. So yeah. This is under your $19 US per month subscription, and you don't have to have an actual brokerage, but it still gives you access to these tools that I've shown today.
Yes, exactly. And for those that are in the U.S. that are interested in brokerage, that's available as well. And even in the U.S., you can sign up for subscription and then upgrade the brokerage eventually, which is, to the point I was trying to make, which is sort of that journey we like to see. And yeah, and if your viewers want a discount code for subscription, they can put in drawbridge in all caps.
Okay.
They'll get a discount.
Well, thank you for that. That's amazing. I'll put that in the description down below. We'll give you like a direct link, and you actually have some really great introductory videos as well on spreads right on your homepage, which I went through. I watched them all. They're very short. They're very succinct, and I thought they were a great little introduction. So I wanted to say thank you for providing that kind of information in such a clear and concise way, because there's not a lot of people out there that are doing that kind of thing for spreads specifically.
Yeah, and that was sort of the goal. It's sort of Options University on our sites, and the goal was, can we explain credit spreads and debit spreads in a half an hour, right?
Right.
It's sort of just a series of 3 and 4 minute videos walking you through that light bulb moment of, how these trades work, and then how I could potentially use them in my everyday investing.
Right, and that is the goal, to be able to integrate options into our everyday to because I think it needs to be accessible to people, and it's why I have my channel, and it's why you're doing what you're doing. So
exactly.
Yeah, CC, this has been amazing. Thank you very much, and I will be in contact again with you soon, and we'll have to do this again when the site has some exciting updates.
Definitely. Thanks for having me, Levi.
Okay, take care.
Right.
Thanks.
Yeah.
Bye.